shifting focus, Madhavan Menon, the Chairman and Managing Director at Thomas Cook, joins us on the show now. Madhavan, before I come to your earnings, I'm very intrigued to ask you about the impact that you're expecting on the entire international travel with that 20% TCS now being applied on the credit card. What's your take? Because the social media is abuzz with the commentary coming around that.
Good morning, Avan. Thanks for having me on your show today. Look, I think the reality is that it is an instrument that the government has used for a variety of reasons. I suspect that initially it will be a dampener, but in the medium term, things should come back to normal. We heard all of this noise when they introduced the 5% TCS nearly a year ago. Now they've raised it to 20%. They obviously have their own reasons for doing it. But honestly, I think they're using a hammer to kill a fly because, the people that they obviously seem to be chasing are not the people in our target segment. Anyway, it's a reality. But I believe that it will not, in the medium term, will not dampen the demand that we are witnessing. And we have some forward bookings which reflect that for us.
Interesting, they're using a hammer to kill a fly, but just wanted to get a sense from you, Mr. Menon, what's the breakup right now in terms of the order booking? Is it largely done through credit cards? Is it done through cash debit cards as well? What's the use of the Forex cards, etc.? If you can help us understand what's the split at this point of time?
So in terms of buying holidays, a lot of this is done through NEFT payments. They're done through cards are a small segment of that element, but the reality is that it will, on any holiday, it's going to be captured one way or the other. My belief is that since it can be adjusted against advance tax paid in the quarters after the booking, my expectation is that people will realize that there may be a short-term cash mismatch, but that could get sorted out fairly quickly. So from my point of view, I think once people recognize that this is not an increase in cost in the true sense of the word, that the demand will get back to normal. Okay, having said that, our domestic travel is unaffected by all this. It is the fastest growing segment that we are witnessing. And, given all the infrastructure, the new hotels, we are seeing no shortage of demand in that segment. Both Sterling and Thomas Cook and SOTC are witnessing a surge in demand in that segment.
Anisha here is getting very perturbed and we're having a debate in the studio. Is it also inclusive of Forex cards to travel, etc.? Can you just walk us through what is included, not, so she can heave a sigh of relief maybe?
So look, it is going to, yesterday's RBI notice in effect applies to everything, credit cards. However, they've not mentioned debit cards and prepaid cards specifically in that. But my expectation is once the rules come out, we will get a clearer understanding. I think RBI needs to articulate how this is going to be managed, and the banks then have to figure out how they're going to work it out. Obviously, there are ways and means that they can do it, but I think we just have to wait and see, because the 5% TCS on foreign spends on credit cards came into play as of yesterday. So I don't think there's any escaping this one. But the reality is that it's as I call it, a temporary mismatch in your cash. It's not an increased cost. I think that is something that needs to be clarified, or the public needs to be educated on that element. And I suspect that the card issuers are going to go around joining us in explaining this, because the scope of this is much broader than just travel. I mean, I do admit that we were concerned when the regulation came out, how travelers could book directly with offshore entities and get away with it. I think that gets resolved. But one thing that doesn't get resolved is people buying currency from the grey market and using it to pay for their holidays on arrival at the destination. There is still leakages involved. So which is why I called it using a hammer to swat a fly. I mean, I think this needed to be thought through a little more. And I hope the government at some stage, once it starts addressing all the small issues and the ripple effect, will actually understand what it implies.
Joining, and we'll talk numbers, but I just have one last follow-up question because I'm planning to travel next 6 weeks, and I've not got any forward cover for any currency, which means whatever my foreign budget is, I'll have to now account for 20% more. To put it very simple, 25% more, not even 25% actually.
20%, Nikunj.
20%, yeah, sorry, 20% more automatically. Oops, I'll have to cut holidays or maybe cut the number of days.
Come on, Nikunj.
That's a real one.
Mr. Menon, a 5 lakh trip is going to cost us 6 lakh rupees. A working capital issue is directly at hand here.
No, look, as I said once, we heard all this noise, not from you, but from social media and from everybody when the 5% came in. It just did not affect things at all. I don't think once people realize that what it implies, it will not make a difference in the near term.
Now, sir, the company which you represent is in travel, tourism, hospitality. That sector is going through a boom like never before. But if I look at your numbers for the quarter gone by, there is a loss. Can you walk us through the fine print just for the understanding of our viewers, because that just caught everyone's attention?
Yeah. So I think what Nikunj, you should look at the EBIT number rather than looking at the PBT number, because if you look at the EBIT number, you will see that there are two elements there which I want to highlight. One is the interest and finance cost. Please understand that we run a foreign exchange business where there is a large component of bank charges which have always existed, which have not changed. The interest component out of that is the smallest component. The second more important one is the mark-to-market of the Quest shares. Now, this is notional because this is held on behalf of an employee trust and therefore should not be counted. So if you look at the operating quarter, and please remember, this is a quarter which is normally an investment quarter. The January to March quarter is when people do their bookings and then they travel thereafter. Despite that, we are booking a profit in this quarter. This is actually a first. We have not seen it for several years. And I think that is the important aspect. And this is driven by two elements. One is the foreign exchange business, where we've seen a significant growth in our retail. The second aspect is the domestic business. And third is in hospitality. We've seen a lower occupancy, the reality is that higher average room rates have helped. At Thomas Cook and SOTC, the higher input costs have also helped us. So, my expectation is that we need to look at the EBIT or the number or the operating PBT, which actually is positive, rather than looking at the absolute reported number.
Okay, travel-related services, your mainstay, that has gone up, and we should not do a year-on-year comparison because there was this whole COVID overhang which was there. But what we want to understand from you is that how much of your travel business has normalized and how much of your travel business has gone back to higher than COVID?
Okay. So if you look at the corporate travel business, we're at 109% of pre-COVID. And this despite 90% of our travel is domestic and 10% is international. Obviously, higher airfares, other activity. If you look at our incentives business, it is booming. I mean, we've got bookings that will go right through the end of the year. My expectation is that they will have a record year this year. And it's driven by a variety of things. First of all, corporates coming back, looking for incentives. Secondly, the G20, we are one of 3 companies that is providing the logistical arrangements around the G20 meetings. We've done nearly 60. My understanding is that there are nearly 30 or 40 more that we will do. A third element is the Khelo India. Khelo India is the sports events that we've seen one in Madhya Pradesh already this year. There are two more. One in Uttar Pradesh that comes in the next month or so, followed by one in Goa later in the year. Now, the reality is the MICE business has also seen it. In the case of the leisure travel, we've seen a lot of activity in the short haul in the January to March quarter, both domestic as well as in the Indian Ocean periphery. However, if you look at the April, May, June quarter, we are witnessing a lot of demand for Europe. So in the coming quarter, you will see the leisure business catching up. By the end of the year, if I just look at pre-COVID volumes, we will be there. But right now, we're going quarter on quarter on the leisure business. Lastly, the foreign exchange business, which has really driven our volumes, be it retail, both online as well as through our shops, remittances, students, we've seen it firing on all cylinders. So my expectation is, and including card loads, I mean, for the first time, the float that we have on our card loads have crossed 1,000 crores. These are all numbers that are stacking up and projecting a good year ahead for us, barring the headwinds, obviously, of the short-term impact of TCS as well as the geopolitical situation. Obviously, none of us can predict how that is going to work. My expectation is that airfares and hotel rates will remain hard for the rest of this year, but that doesn't seem to bother anybody. I mean, look at domestic flights in India. Airfares for Bombay, Delhi, north of 10,000, and people are still traveling. It's not just business people, but it's families traveling. You find the whole thing. So I think there is a lot of demand. We just have to play it out step by step. And my expectation is that FY 23-24, as well as every quarter during 23-24, will give us a benefit. Last point I want to make, Nikunj, is that we are also seeing cost-saving benefits flow to the bottom line at an operating level. We're seeing the benefits of digitization in terms of delivery of products to our customers across leisure, across foreign exchange, and in our corporate travel, we're using a booking tool as well as e-invoicing. I think all this has given us productivity benefits that we are driving. Now, if at an operating level, I think we've done extremely well. Yes, there are these elements which we have to live with, and hopefully in the coming quarters, their impact will disappear.
So if all things are equal, which is the growth continues, there are no geopolitical tensions, the impact of TCS is going to last for some time, how will FY24 be different from FY23? Because you got your, mojo back, if I may use that word, in terms of reaching an operating pivot point.
Yeah. So I think two important elements in this is that the leisure business is not back at pre-COVID levels. So I expect that to happen. In the inbound business, both in India, which is a company called Sita that operates out of Delhi, as well as Asian Trails, which is a subsidiary that operates in Southeast Asia, they've been slow to start, partly because of China not yet opening up, and long-haul travel, especially from Europe, still in the early stages of pickup. Now, both these will start firing on all cylinders starting October. So my expectation is that that is one upside. The other upside is Sterling Holidays, where we propose to add a hotel every month in the second half of this year and reach occupancy rates which are higher than the peak we've done of 70, 72, 73%. And with the increased average room rates, my expectation is that you add all these up with the foreign exchange business continuing to fire. My expectation is that we will see a higher operating profit 23-24.
Okay, thank you for clarifying that and giving us a sense as to what the long-term outlook is when it comes to Thomas Cook, as well as all the latest updates on TCS.